Hello, traders. It's 8:03 a.m. Chicago time on Thursday, the 29th of August, 2019. This is episode number 1585. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The last Thursday of August, 2019. This morning, risk on. The market sentiment is allocating to risk this morning across the board. We have the lead by the European markets. The Euro stocks are up 39 points or 1.16%, followed by the Nasdaq up 82 and a quarter or 1.1%. The DAX follows the Dow, and so on. The yen's the laggard. The bonds are off 8 ticks, and the 10 years are off 3.5 ticks. The Bund's off 8 ticks. In case you have not caught up with the news, at approximately 2 a.m. Central, 3 a.m. Eastern, that's at the European Open, cash open, um, the Chinese government came out and a spokesman came out and talked about the it's actually a Chinese Commerce Ministry spokesman, Gao Feng, said China and U.S. are in effective contact. China and U.S. are discussing about the September trade talks. Reiterates that it's necessary to create conditions for talks. China has complained to U.S. about new tariffs. Hopes U.S. removes new tariffs. Reiterates view that China has ample retaliatory tools to respond to tariffs. China cannot discriminate against foreign companies. And so the markets shot up. I'll show you that in Bookmap, CT Bookmap in a moment. But the market is experiencing some relief in what it sees as good news and has pushed into 2920 in the S&Ps. So we have a gap from 2890 to where we are now, 2914, key area that I talked about yesterday. And the market has, in fact, turned and blown out the shorts as expected. I discussed this on Monday that later in the week, the market is really, the way it's trading, it's really likely to squeeze shorts at some point. It's just waiting for it. So that's where we stand. In terms of the calendar, it was a busy calendar overnight. A lot of releases, a lot of European releases, and so on. The key of which are Japanese consumer confidence came in relatively in line. France's GDP growth was stronger than expected. Business confidence in Europe came in stronger than expected. Inflation rate in Germany was lower than expected, which is good. And GDP growth in the U.S. came in line at 2%. Previous is 3.1. This is a Q-on-Q estimate for Q2. And then what we have remaining for the session is pending home sales a half hour after the open. Um, uh, uh, a half hour after the open. This is a lower tier figure, expecting 0 for pending home sales. And then later in the evening, at about 7 o'clock Eastern, we get GfK consumer confidence, which is considered a high tier figure. It's also expected at negative 12. So that's what's on deck. Let's take a look at what was expected yesterday. The primary scenario for yesterday and the way we closed, because we did attack the 28.55 in the prior overnight session, not last night. The main idea, given the configuration that we were in, we were below the overnight point of control. We were pushing near lows. The expectation is it's very, very likely to respond back to 28.72 and then have an impulse down and push towards 28.45. That did not happen. Barring that, this is kind of go no go situation. Barring that, then a test above 82. Remember, 82, 84 is a price, a key area that I talked about. Where does that key area come from? Right in here. Okay. The high of Monday, the low volume node, key low volume node of Tuesday. This creates a line in the sand, a key area marked by a stock zone there. As soon as it pushes above there, I talked about the strong potential that it would push into 91, into the 91 area for a pullback. And if we don't run out of time, we're likely to push through 2900 towards 2914, 2914 right up here, which is where we are. Now we ran out of time to the 2914, but we took care of that this morning. Here's what actually happened yesterday. We ended up opening and pushing down. We did take out the prior day's low, where we got an impulse into 72. So here's a scenario 1 or scenario 2 in play. We don't know yet. And then the second impulse right there is what tells us that 81, 82, 84 is likely to be threatened. We push into 87. We consolidate in that low volume node. And then we start to push through to 28.90 and we run out of time. So this is scenario 2 in play. Okay, and then the continuation of scenario 2, of course, is consolidation here, a push to 29.14, and that would be the key target, 29.14. The overnight session pushed to 29.20, and there's a lot of liquidity up there in 29.20, and it held. In fact, the overnight session moved the point of control to the upper end of the range, trading a ton of volume up there, 29.18-ish, 29.17.75, and it hasn't mustered up the buyers to push through the 29.20 liquidity. This is what we did yesterday. Scenario 2 almost on the nose. So it's one of those things that once it tests a key area and doesn't pull back very well, we start to look for longs, and that worked out. The overnight session has us pulling back to the first low volume node and testing the prior IB high, and then we just sat sideways until this news event at the open of the European session. Major impulse. We had this particular move here was 30 points. 30 points in that 15-minute bar. And then since then, we have just simply been grinding up. And look at that high in the overnight session. A very, very poor high with the point of control at the top, with the low volume node at the high of the spike, the new spike at 29.11. And we're trading around 29.14 and falling towards that low volume node. We'll see how that's treated before the open, but that's probably going to be in play this morning as a kind of an air pocket, an area of turbulence, as we open into the session. Very odd looking profile, really good volume, 401,000. Expecting this session to have some movement, and given that the Chinese government has said something, we know that the current administration is not going to go without responding, commenting, maybe contradicting whatever's being said there, because everything requires a response. And so today, there are likely to be some news-based surprises. So pay attention to that. Looking at how things were in the overnight session, look at this heat map. This is ctbookmap.pro. The news event occurs right in here in 28. The SOC for the news is 2881.50. 2881.50 was the last print before volume came in and pushed. It actually initially pushed down, and then it spiked up and it took, there were some collisions along the way, some liquidity that was taken out, um, and then it came up to this liquidity that's been sitting here since the news event, and it's not able to push through it. That's at 28.20, and we squeezed and traded quite a bit in this region in the overnight session. So the overnight point of control is right up here, ON VPOC, and we're pulling back a little bit. We're seeing some liquidity that's relatively stable in this area right here. I'm going to be paying attention to that on the open 2908. That's at the bottom end of the low volume node created overnight. If that doesn't hold, then we are likely to trickle back down towards 2903 and 2900. Okay, so if those levels don't hold, then the market is likely to retest lower, and essentially what we would have is a responsive selling on a gap up, and that's what we're looking for this morning, unless it continues to take out the 2920. 2920 gets taken out. 2928.50 is the next key price. Does anybody know what 2928.50 is? You've heard this price a lot this month. We went away from it almost 100 points. I think we put in a low at 28.34. But 29, 28.50, if you've been paying attention, that's the MC point of control since the beginning of August, and that's the magnet in this area. This is the most accepted or most traded price in the region, and so it's likely to act as a magnet, and that's where we would probably see the market go. It is a key area for the auction to test. So the auction moves from high volume nodes, from highly accepted areas to low volume nodes, areas of rejection, tests those areas. If they get rejected again, it goes back to the high volume node, tests the other side. Otherwise, it falls back on the high volume node. And that's what we've done. We've moved from above it, below it, moved way below it to the next high volume node below, and then we are coming back from below, so that's the next key area to be tested. Is the market willing to trade a lot in that area? We won't know until we get up there, and so at some point we're likely to get up there. So the MC point of control is 29.2850. So that's that. Other than that, let's take a look at what we are expecting for today. For today, with a gap right now of about 26 points, we have we need to pay attention to the gap zone mid, which will be about 2903, somewhere around there. We'll see where it opens, but the gap is the high of the prior day to wherever we happen to open. We look for the midpoint of that, and that becomes a bit of a measuring stick on the performance of the responsive action. This morning, we are right up against the highs. I expect that participants will come in and immediately squeeze this high, and I expect it to spike through. Quite a bit traded there, and we're really wound up. How do I know we're really wound up in that area? Uh, we're wound up in that area because the overnight point of control is there, and that indicates to us that since the market reopened at 4:30 p.m. Eastern, that's the most volume, and it's likely to be wrong if it pushes through. So we're looking for a spike up, and then I'm looking for to make an attempt to be responsive this morning. And I don't expect it to close the gap. Hold steady at 2903 or so, and then just hold in line right there. Okay, may go and test because 29.50 and 28.50 are just a stone's throw away. It's just 10 points up. It may go as high as that. It may go and test that area, but overall, I'm looking for it to test up and then become responsive and hold steady in the range. We'll have an island day by the end of the day. That's the key or the main trade of the day, the main likely trade of the day. Otherwise, we become responsive right off the open. We move towards that 29.03. We have an impulse up, brings us back to the 29.14 and 29.20, and then we start to push to 28.50 and squeeze above the sell day high, which is Friday. And that is expected to have a spike up as well because a lot of size and a lot of volume went off that day. And those people are likely to be wrong as well. So I expect it to push higher and then hold steady with a gap open underneath. Okay, so that's scenario two. I'll leave you with those. I'm over my time. Again, the scenarios are not intended to be predictions. People see these and they're like, why is this guy predicting where the market goes? These are not predictions. These are simply what is expected. And it's really, really important to measure what's expected versus what it does. It gives us a lot of information. And if you're trading size, getting that information, um, getting that information gives us a high confidence play, as Jesse Livermore described in the 100-year-old book, um, Reminiscences of a Stock Operator. You know, you test the opposite side. If the opposite side doesn't get any activity, then you go strong the opposite way. This is the idea behind these. We expect the market to behave a certain way. If it doesn't, then we expect the other scenario to play out, and we can hold fast for targets. Okay. Good luck, and I'll catch you tomorrow. Take care.